just a quick comment on trading being risky. And very important to understand, this week was extremely volatile. If you're a trader, you know that. If you've been watching the market, you know that. And volatility like this, with the market being driven by news and not basically fundamentals or even technicals, is an extremely risky place to be. And I know a lot of retail traders, hundreds and hundreds of retail traders, and I can tell you a lot of retail traders' careers ended this past week. The volatility was too much. They got trapped in it. They got margin calls, and they're out of business. And so this is why trying to keep trades to a minimum this week was very, very critical. All right, so let's see if we can't help to try to make everybody consistently profitable and keep you out of the group of folks that got their head beat into this week and ended up giving up trading. All right, and if you have any questions, by the way, that I can't answer, I just put your name and phone number in the question box or in the chat box or your Skype username, and Rory from Rightline will get back to you and answer any questions you have relative to what the software, the alert service, the room, anything that we talked about. But put them in the question box first here. I can usually answer most of the questions that occur. All right, so this is just kind of a graphic of the SPY super system that runs on thinkorswim. I'll show you a much more detailed one in a minute. But the whole point here is we try to track institutional money flow to determine what the institutions are trading in and what they're not trading in, and try to follow them as closely as we possibly can. And it was a wild week of institutional trading. This is the alert service that we have. Besides the room, the alert service is a text service that goes out on SMS alerts to your phone with the highest probability trade setups that we're taking. And you get them and can trade them, and it'll give you an alert when you get in the trade. It gives us an alert when we get out of the trade. It'll give you any adjustments to the trade as time progresses. All right, so first thing I want to talk about, and I talk about this in every webinar, people get sick of hearing about it, but this is something that's very important to understand. A market consists of many small retail traders like us, and this is retail. These are the retail traders, and it has one large institutional trader. Now, this institutional trader is made up of a bunch of different companies, which we'll talk about. But it's important to understand that when retail traders are in the market pretty much by themselves, with no consensus of institutions trading right then, we're trading against other retail traders. What you're going to get is a lot of chop and a lot of chaos in the market. There's no trend. Retail traders cannot create trends, stop trends, begin trends. We're just creating chaos. So when this is what the situation is, when retail traders are trading and institutions are not, we don't want to be in there. That's not a high probability trading setup. Now the institutions, and most everybody knows these are made up of investment banks, Bank of America, JP Morgan, Chase, Wells Fargo, Morgan Stanley, HSBC, all the big banks make up the institutions, part of the institutions, all right? And they also include pension funds, big pension funds, state worker pension funds, police pension funds, fireman pension funds, billions of dollars in these funds that put to work in the market, and they trade them and they invest them. Then you also have hedge funds, hundreds of hedge funds. Some of the hedge funds this week that were structured short, there are hedge funds that are set up to be short. And they look for short opportunities in the market, and they load up on those short opportunities, and they trade those, and people invest in the hedge funds that did that. They get clobbered this week on that big reversal, and several of the big hedge funds are in trouble because of that. And but they make up also part of the institutions. And the last one would be companies like T. Rowe Price and Vanguard mutual funds that have also billions of dollars to invest. So that's what makes up the institutions, and this is what we're trying to identify with the SPY Super System software, as well as price action, to determine if institutions are in the trade. It's important to understand that institutions also use, they do use desk traders, where they have humans that are at a desk making trades, but that's not much of their business. Most of it comes from algos. You've probably heard about these are computer programs or algos, they call them, that trade, and they look for specific conditions in the market or specific news in the market and trade off of that news. And they're looking for many different kinds of things. And so it's very important to be able to identify when they're in there and when they're not. Okay, in the room we have a couple of rules to trade by, and it's on the alert service too. We trade the best and skip the rest. Sounds very simple. It's not very simple to do, but trading the best and skipping the rest is important. And this is probably the most important portion of it. Skip the rest. If you can skip many trades that will turn into losers, if you can identify when you don't have a high probability trade setup and miss them, this is as good as a win. Missing bad trades is just as good as finding good trades. So this is very important as well. So we trade the best and skip the rest. And one of the sayings we have is, our objective is not to make trades. Our objective is to make money. We're not in there just trying to trade. Now, this is meant to keep traders, retail traders from over trading, which is one of the biggest problems retail traders have. They just cannot sit on their hands and not trade. They feel as though they need to be trading all the time. And it's a big problem because over trading is a killer for retail traders. So our objective is to make money, and we do that by focusing only on high probability trade setups. Now, maintaining discipline is a key here. Maintaining discipline, and what I mean by maintaining discipline is if you have a known strategies that you know work 80%, 85, 90% of the time, you maintain those strategies. That's what you're going to trade. You're not going to be looking to a social media post or a news event or something on CNBC that's telling you what you should be trading. And this trade's hot, or that trade's hot. That's a big mistake. You want to maintain discipline. We have strategies we know they work. Between 80 and 90% of the time, we're going to stick to those. We're going to not listen to anything on the television with talking heads. It's important to understand these folks that come on TV that are touted as experts on there. And they'll tell you about this stock or that stock or this situation or that situation. They don't know any more than you do about what the market's actually going to do. They think they do, but they don't know any more than you do about what the market's going to do. So please don't be influenced by them. We want to stick to our criteria and our methodology, and that's all. And remaining patient, the hardest thing for retail traders to do. Again, skip the rest as part of remaining patient. Don't be just looking for trades. Looking for only good trades. Don't be jumping into trades when you get bored or when you're down money or you take a big loss and now you want to get even again, called revenge trading. You don't want to do any of that. Right? So this is a discipline that we look for. Now, we need an edge as a profitable trader. We need an edge over other retail traders. And our edges are the SPY Super System, the software package that we use that goes on Thinkorswim that identifies when institutions are in the trade and when they're not. We trade relative strength and relative weakness. This is a kind of an overlooked criteria that a lot of retail traders don't look at. They think they look at RSI, they think that's relative strength. That's not. Relative strength is what is my stock that I'm thinking of trading, how is that performing versus the S&P 500, the SPY, right now on a 5-minute chart or right now on a daily chart. How is it performing? Is it outperforming? If the SPY is going sideways and down, is it going up? Good, it's got relative strength. Is the SPY going sideways and up, and my stock stacking red candles? Good, it's got relative weakness. Getting into stocks that have relative strength and relative weakness for trades increases your edge dramatically, because they're not going to react as violently to a stock, to a move in the market that goes against you. We try to trade with the market trend if there is one. This has been pretty hard to find lately, but we do try to trade with the market trend if there is one. And then the last thing is to buy near support and sell near resistance. This is really important because this tries to keep us out of chasing stocks when they're stacking green candles. Market opens in the morning, you get a stock that's stacking green candle after green candle, and you're sitting there and you get FOMO, you get fear of missing out, and you can't take it anymore, and you jump into the trade. You think I'm losing out on all this money, and you jump into the trade, and more often than not, you're jumping into the trade just before it reverses and heads back down again. And now you're sitting on a stock way away from support. What do you do? Are you going to hold it till it goes all the way back to support? It's going to be pretty ugly P&L when it gets down there. But you want to do is wait for the stock to pull back to a support level that you've got. If it doesn't pull back to the support level, then you're going to miss the trade. But that's okay. But when they do pull back to support and then bounce off of there and go back into the support again, back up into the trend again, you're in it at a good price. And now, while the person that jumped in at the high is basically crying, trying to get out of the trade, without losing too much money. You're in there, and as the stock moves back up again, you're in profits. Much, much easier. Okay, and selling near resistance is exactly the same thing, except for shorts. If I have a stock that's moving down, bounces up to resistance, and then turns around, heads back down again, that would be your interest for a short. All right, very important, very overlooked by most retail traders, trading relative strength and relative weakness, and making sure you use support and resistance levels. The Compass system, which is the original name of the SPY Super System software, which is, we've added some things to it, which now we call it the SPY Super System, but it identifies the highest probability trade setups while sidestepping setups that look good, but they're going to fail more often than they succeed. It identifies when institutions are driving the move and when they're not. And it does analyze some fairly complex trading data, trends, and momentum across multiple time frames, and displays the results in easily identifiable format. So you can see this really clearly on the SPY Super System software that you'll see as we go forward here. And the visual element, because it does display it in colors visually, it makes it possible for even new traders to find high probability trade setups. It really helps the learning curve, the amount of time it takes to become consistently profitable, because it does take time. And how do we get the edge over retail traders? Well, simple. We're only taking trades that are being driven by institutions. We're trading stocks that have relative strength or relative weakness, as we said, and we're trading in the direction of the overall market. If you do these three things, this puts you ahead of about 95% of retail traders in the world, and there's millions of retail traders. And remember, we're trading against retail traders. We're not trading against institutions. We're not going to beat institutions. We're following the institutions. We're going to take our money from other retail traders who don't have the same expertise we do. They don't have the same methodologies we do. They don't have the same software. They can't identify the setups as well as we do. They don't know when institutions are in the trade. So again, our trades will be supported by institutional buying and selling. They'll be outperforming the SPY, and they'll be moving in the direction of the overall market. Okay, so that is how we get an edge over retail traders. We're going to get into this more detail later, but this is a screenshot of the SPY Super System on Thinkorswim. And you don't need to trade on Thinkorswim. I don't, but the software runs on Thinkorswim. And this is an actual graphic of the Qs. This was taken on the Qs 131, but doesn't matter. This is what the software looks like. This is on a 5-minute chart, but you can have any time frame up here as you want. But this was just meant to identify the critical elements that we identify in the SPY Super System that helps you identify whether institutions are in trades or not. These are the actual indicators down here. This is the long-term trend, and they can be either red and yellow for short, and blue and green for long. And you'll see that. But this obviously is telling us that the trend right now is down, a long-term trend. This is a multi-time frame momentum. This is what the institution's doing on multiple time frames. If we're looking at the 5-minute chart, this would be the 5-minute, the 15-minute, and the 45 minutes. It's looking at all three of those. If all three of those are moving in the same direction, the momentum is moving in the same direction, and it isn't just a direction. There's some specific criteria that it's using to identify momentum. This tells us that that's bearish. Now you can see here on the current time frame momentum. This is just on this chart, just the 5-minute time frame. You notice that it went from here from red to blue. Red is bearish, blue is bullish, and green is very bullish. And this is telling us that the momentum is starting to turn up, and this is the actual oscillator that's showing that. And this oscillator it's the Laguerre, but it has the divergence stripped out of it. This is purely momentum. So this tells us that we're getting a little bit of a turn. So if you happen to be short here, this is where you would get out of the trade if you were short and wait for it to go back up again. Right. So these are the indicators. This is how we identify if institutions are in the trade or not. What we use on the chart is fairly basic. This is a VWAP. This is called the volume weighted average price. Right. This is very, very critical. This is a level that all the institutions trade off of. On the 5-minute chart, not on the daily chart, on the 5-minute chart, they trade off of this. So this is one of the key levels that we use for support or resistance to enter trades and exit trades. The other one we use is this 15 EMA. This is a 15 exponential moving average. It's actually a 15 EMA of an EMA. It's actually that's smoothed out, so it doesn't quite as herky-jerky as a regular 15. But this becomes our other support and resistance level right here. Right. So these are the two levels we trade off of. The VWAP and the 15 EMA. right? This is a pivot point. This is something that the SPY super system puts in there. The pivot point is important. It actually is a fairly strong support and resistance level. I don't trade off of it, but if I'm in a trade and the trade is coming down and I'm short and I get close to the pivot point, I'm going to think about taking profits, which I would have done right there on a trade like this. All right, so this, I just wanted to show this first before we go ahead. All right, so this is going to tell us what the institutions are doing right now. And I have a question here: are these lagging or leading indicators? Well, the fact that when we're looking at the current time frame momentum, when the momentum switches from for a case here from red to blue, now the price hasn't moved much, but this is telling us that there's more institutions coming in here buying now. Momentum-wise, is telling us that the momentum is switched from bearish to bullish. It's moving in that direction. So in that frame, it's actually leading. Now, these things can show up prior to the actual move taking place. You know, because you're talking most indicators like MACDs and RSI, those are all lagging indicators. Most indicators are lagging, but these attempt to be more forward-looking because of the fact that they're identifying this momentum is very quickly, and this is identifying what the institutions are doing. And typically, institutions obviously are if they're coming into a trade, that's a leading indicator. Okay. All right. So I just wanted to show you that. We'll go over that in just a minute. Now, a couple of things I want to talk about. This is what's called the basic high probability trade setup funnel. Now, this is kind of really important because let's just, for example, this is the process that we go through. All right. So there are two things that you're looking at when you're trading. There's the process, which is basically identifying stocks, identifying setups, and finding the levels to get in and get out. This is what this is going to look for. Finding the best stocks. This is the process that we go through. The results will be how much money did you make or lose. Now, it's very important to understand one thing. You've got to get the basic probabilities trade set up. You've got to get the process down, and that needs to be something that's internalized that you're going to follow. The process is going to precede getting any kind of good results. If you're focusing on the results before you've got your process down, you're not going to be able to be consistently profitable. The process is critical, and we'll go through it right here. But this is the critical thing as to whether your results are coming out, because I'm going to show you the results that we get in the room and the results that I've had trading with the methodologies we use. But the reason the results are good is because we focus only on the process here. Learn the process and follow the process. The money will follow. If you're focusing only on the results that you're having, did I make money in this trade or did I lose money in this trade? You're going down the wrong path, because there can be plenty of good trades that lose money, and there can be plenty of terrible trades that make money. But if you're not following the process, in the end, it's not going to work well for you. Okay. All right. So the first thing I do is when I look at a trade, if it's going to be it's what I call a swing trade. If it's going to last several hours, 4 or 5 hours, maybe all day, or swing it overnight or 2 or 3 weeks into the future, the first thing I look at is the daily chart. And this is a lot of retail traders don't do this. They look at a 5-minute chart. The chart setup looks good. Unless you're scalping, you want to make sure you look at the daily chart first, right? Once you've determined that the stock is lined up in the direction you want to go, if you're going long, you want the daily chart to be bullish. Then you look at the 5-minute chart to try to find the best entry for that. But this is really critical, and most retail traders don't do this. I mean, in the room, people post trades that I look at. Again, in the room, I'm there all day long from market open to market close, and traders will post trades that they're either in or they're thinking you're taking. They'll put them out there, and I'll put the chart up and we'll look at it. And I'm really amazed how many times they're putting up trades that they're going to go long or they go short, and all I do is pop up the daily chart and say, what do you think about this now? And all of a sudden, it's not doesn't look so good anymore. So look at the daily chart first. Then we want to trade with the trend, both the stock and the market trend. All right, what is that stock doing? What's the market doing? The market is very critical. You've got to try to trade with the market. The market is what drives about 80% of the stock movement, so that's very important as well. So we trade with the trend of the stock and the market. Then the SPY super system must align. So if we're going long, we've got to have blue and green on our indicators. It's important. If we don't have blue or green in the indicators, I'm not taking the trade if it's going long. If I'm going short, there's got to be red or yellow. All right. If I'm going long and the indicator for current time frame momentum is red or yellow, I'm not going to take it. I'm going to wait until that momentum switches so that I can jump on it when the institutions are in. And then again, we trade relative strength and relative weakness. So as these stocks pull down through here, you got several of them that meet these criteria. Now you look to find out which ones have relative strength and relative weakness. And then we're going to try to enter near support or resistance. If we're far away from that, I just put an alert on my chart to identify the support or resistance. So this is the process. Think about this probability as the process. This is the process we're going through to find this very best stock setups. All right. The results would be how much money you make or lose. But if you're focusing on how much money you make and lose before you focus on the process, you're doing it backwards, and it's not going to end well. All right. So again, this is just a written explanation of the funnel method. Stocks to be traded should have daily and 5-minute chart aligned. I've highlighted that. And SPY super system indicators must align in the direction of the trade. Very critical. Now, when you're going into a trade on the 5-minute chart, if you're going to go long, the stock price needs to be above the VWAP. If you're going to go short, it needs to be below the VWAP. The institutions all use this VWAP. That's why we use this as a support and resistance level. All right, and have patience. Very, very critical to have patience. So that's what we call our high probability trade setups. That is the process we go through to find the trades that we want to trade. Now, in the trading room itself and on the alert surface, these are the options methodologies that we use. We have several, and you have to match your methodology or the type of trade you're taking, or the type of method that you're trading, the strategy that you're using needs to take the market into consideration. So there are a lot of times right now on Wednesday, Thursday, Friday this week, if you looked at the option prices and you wanted to buy straight puts and straight calls, you were paying so much money for those options that it was way too risky to take because the market had been so volatile that they jacked them up. To give you an example, on a normal day, if you take an at the money SPY call and you want to go long with SPY, the S&P 500 on a 5-minute chart, and typically at the money is going to cost you somewhere between about $2.20 and $3 a contract if it's in the morning and it expires the end of the day. All right, so that'd be a 0 DTE. So between about $2.20 and $3. On Wednesday and Thursday in this week, those same options would usually go for about $2.20, $2.50, something like that. They were going for $7.50 a contract. Same amount of time on them, same price, $7.50 a contract. So that you're paying exorbitant amount of money for the calls and the puts. The market makers are trying to protect themselves. They don't know how much the market's going to move or which direction. So that's why we have to determine what methodology we're going to use. So we use straight calls and straight puts when they're effective. We use straddles and strangles. That's a non-directional trade. We like a stock to move, but we don't care which way it goes. We'll use straddles and strangles. We use debit spreads using weekly options expiration with high bid-ask spreads on stocks that are expensive. Doing debit spreads is probably the better way to approach these things because you're taking buying one and selling another, so you cut down your cost a lot. You can still get into it for a reasonable price, and we've done quite a few of these. Over earnings, we do what's called time spreads. These are calendar spreads. This is just meant to capture the volatility in the volatility crush when the earnings come out. Before earnings come out, the option prices are pushed way up because the market makers don't know what the results are going to be, and they don't know which way the stock's going to move. So they increase the cost of the premium. What we do is we do time spreads where we sell this week's and buy next week's calls, and we capture the volatility crush after the earnings comes out. That's all it's meant to do. It's not directional. We use weekly ATM strategy to capture premium week after week. We use only in a neutral to bullish market. We are not in that right now, so I don't do these right now, but this is what we do when it's neutral to bullish. We sell puts against a neutral to bullish stock. We sell them weekly to bring in premium, and we keep a longer term dated put out in the future to protect ourselves in case the stock turns around and heads down. And we also do credit spreads to capture premium over a few weeks. Now inside the room, we do one strategy. This is not one that we post on, and this is not one that I can alert on because they're too quick. but this is a SPY super system for very high probability trades. We catch the SPY, the Qs, or the IWM, or futures. You can trade on futures on the 5-minute chart. These are quick trades, but we call them out in the room when we see them, and they work extremely well, but you've got to manage the trade yourself. You've got to be watching it. You can't put the trade on and walk away. You have to watch it and trade it, but typically they're over in between 5 minutes and 30 minutes per trade. All right, now I'll show you the results we've had with those. A lot of folks like to do this. A lot of folks, it's not for them, but we do it in the room just so you know we actually do that. All right, now the alert service that we have is designed for day trades and short-term swing trades. This is what you will get. Typically, they're going to end that day, or they're going to be overnight, or maybe 2 or 3 weeks out, but they're not investment trades. They're designed for traders who can't watch the market all day. We have these real-time alerts on only the highest probability trade setups. And since the market has been so volatile and the cost of the premium has been so high, very few trades have gone out on the alert service in the last week or two. And I even set an alert yesterday to let traders know why we aren't doing anyone. We're not doing a lot of trades right now. I'm basically trying to protect traders from getting into trades that are very minimally profitable. They're likely not to work. And we take that, on the highest probability trades, how do we find these? Okay, we identify institutional involvement. We get in when the institutions are in. We look at market internals. What's the volume of stocks moving up versus the stocks of stocks moving down? In other words, you just take the volume on stocks moving up, you subtract the market volume on stocks moving down, and you see which is a higher. And if you've got a plus side, it's bullish, not negative side, bearish. That's the market internals. And then we do some technical analysis beyond that to identify the various highest probability trade setups. All right, so that's the process we go through. This is the equity curve for the alert service. This is an old one. This is from March 23 up to May 24, based on $2,000 per trade. This is a newer one, equity curve. This is for the Q4 2024 through just the last quarter in the first quarter of this year. Now this includes, I have to tell you, this includes the SPY super system trades that I took, and the results in the SPY super system trade are my results, because I can't tell you what everybody else's results are because I don't post them. I just let you know how I've done with them, and I let you know when I see them set up. But this is the equity curve we've had with that, and we had a really huge run using the SPY super system, and you'll see that. But the other services, the room and the alert service, have done equally as well. And this was our first quarter. We haven't done a lot of SPY super systems here because it's been too volatile. But again, this is the equity curve for the last quarter 2024, current quarter 2025, based on $2,000 per trade. I have to base it on something, so I use it to $2,000. Obviously, everybody's not trading $2,000 per trade. Okay. Now, before we get into the more details on the SPY super system, I want to go ahead and go through the Heiken Ashi candles and work on that, because I know a lot of people came here and that's what they want to learn about or hear about. So I'm going to put that up here in this part of the webinar, and then we'll go ahead and get into the results and more details on charts of the SPY super system. All right, so Heiken Ashi candles with the SPY super system. Again, this was from the Compass Options live trading room, which is now the SPY super system room. All right, so this is actually a British pound, Japanese yen. Doesn't matter. This is just a chart. All right, these are candlesticks, and if you've traded, you know these are what regular candlesticks look like. These are Heiken Ashi candlesticks, right? These are different than regular candlesticks. Now they look the same, but the structure of them is completely different. They actually use 2 candles to make 1 candle. What you see here is if you have no upper shadow, if the candlestick was flat on the top, like that, flat, no wick on the top of it, those are bearish Heiken Ashi candles, very bearish Heiken Ashi candles, right? As a matter of fact, if you have tails on the bottom of a Heiken Ashi candle, that actually makes them more bearish, not less bearish, which is completely opposite from regular candles. But this is a Heiken Ashi candlesticks. You get flat top, flat top. This is a bearish trend, right? And you can see once the trend starts to slow down, you start to get these wicks and tails on the candlesticks right here. And it's trying to reverse to go back up the other way. Now, this flat bottoms are bullish. Flat tops are bearish, flat bottoms are bullish. That's the most important thing you can take away from this. When you get a Heiken candle with a flat bottom, that's a bullish candle. Now, would you take a trade here to go long? Well, I wouldn't, and the reason is when you have a big downtrend like this with big candles, see how big these candles are? Once you get a reversal, you really want the reversal candles to be as big as the original candles were on the original trend, which these aren't. So I wouldn't take this. You could, but you get a little bit of a move, but I wouldn't take this. Now it comes back down again. Here you go to a bearish reversal. We had a bullish reversal, a bearish reversal. Now we're getting a bullish reversal with a big candle. See the flat bottom right here? This is where you would enter the trade. This is where you get long because we've got a big bullish reversal candle and a flat bottom. And you see how you get flat bottom, see how it stacks up? You still get a wick in the tail, but it's still green, and then more flat tops, flat bottoms. This is a bullish trend. Likely you would exit right here. Once you start getting wicks and tails in a red candle, you get out. But you can see how smooth the trend is. So flat tops, bearish, flat bottoms, bullish. Okay, that's the key on these things. All right, and I was going to say, if you haven't used these Heiken candles in your technical analysis, you might want to try using them. And like on the Thinkorswim platform on our SPY Super System, you can flip back and forth between Heiken candles and regular candles. I do it all the time. In any chart, you can put them on there. There's no proprietary setup for Heiken candles. Any charting program you're using will let you use Heiken candles. Heiken candles, it means average bar in Japanese because it's taking two candlesticks and it smooths out the price action. So identifying trends and reversals is clearer. All right, so they eliminate a lot of the noise. This is important. They eliminate the noise, makes it easy to see the trends and stay in the trades. So you're not getting shaken out as easily from the 5-minute candles, which can be pretty noisy. All right. Again, bullish Heiken candles have flat bottoms. Bearish Heiken candles have flat tops. Very important. All right. Again, if you were looking for a reversal, we just showed you this reversal in a bullish trend. It's going to have flat bottom Heiken candles, followed by smaller doji candles, and followed by flat tops. So you go from a flat bottom candle for bullish to a flat top candle for bearish. That's your reversal. That's the reversal you're looking for. And if you're making a trade and you're coming into a trade and you're down to support, and then you get a Heiken candle telling you that the stock is bouncing back up again into the original trend, and you got a Heiken reversal candle there, that is your entry. That's where you want to take it. And it's important to understand one thing. Heiken candles, just because of the way they're structured, are confirmation of the trend reversal. Regular candles are not, but you get a Heiken candle that bounces off a support level and starts to move back up into the trend again. It's inherently a confirmation of that reversal in the trend. And that's how we use them, and that's really, really important. Okay. And again, I'm not going to go, you'll get this on the webinar when you get a copy of it. I'm not going to go through the whole thing. But again, I do have used them with great success. When you do get a Heiken reversal, I emphasize this, the first thing that needs to be true is the Heiken candle height has to be at least as large, preferably larger than the prior candles that occurred prior to the reversal. So in other words, if you got a really bearish down reversal with Heiken candles, and you get little bitty Heiken candles to the green side or to the bullish side, you don't want to do that. You want to see some force on these reversals. Okay. All right, then this just goes over the criteria. So again, this is just kind of a recap of the Heiken candles. They evolved from Japanese candles. They combine the open close data from the previous period with open high low close from the current period. All right, and one thing I do want to show you one thing on here. Notice that each candle, when it opens in the middle of the previous candles. They always open, Heiken candles always open in the middle of the previous candles. And as you see when I show you some charts, there is no gaps in Heiken candles. All right, so again, the fusion minimizes market noise, providing a clearer depiction of the prevailing trend. Helps you identify trend, all right? That's really what the important thing is, and it takes out noise. Again, this just goes over the Heiken candles, the structures of them, et cetera, we just talked about. And it's important to understand that when you look at a regular candle, if you have a bullish candle that is on a regular candlestick and it has a big wick on the top, then that typically is an indication that that bullish candle is losing some momentum, because what it shows is the stock price shot up and then the sellers came in and drove it down, and so the candle ends up with a big wick on the top. That's not the case in Heiken Ashi candles. If you get a wick on the top of a Heiken Ashi candle on a bullish candle, it's more bullish than if it didn't have it there. Okay, and again, here's again going over the trends again with Heiken Ashi candles. Here we see the flat top candles here, bearish, and then we switch to a Heiken Ashi reversal. See the flat bottom right there? But these are little, right? And now we get this reversal here again after these big candles. This is the left level where you want to get in. Right here, you got flat bottom, the candles are getting bigger, and it drives all the way up. And you can see that nice trend that stays in these things. And typically, as long as the candle keeps putting in flat bottoms, you can stay in the trend. Once you get this, you want to get out of it. All right, you might catch it again, but you've made so much money here that you don't want to be betting still in here. All right. So again, flat bottom candles, an uptrend signal, a strong visual of the current trend and strength. Flat bottoms bullish. Reverse with color change, but candles are small. And then a series of flat bottom candles and an uptrend signal, a strong visual of the current trend and strength. And that's what you're looking for. And that's how Heiken Ashi candles help you identify trades. All right. Looking for getting into trades with confirmation. Why wouldn't you get in on the two green flat candles? Okay, let's talk about this. Are you talking about these perhaps here? And you know, this is obviously these are dojis here. This flat candle here, the reason I wouldn't get in on here is because of the size of these candles coming down. To me, it doesn't give you enough confirmation of a big reversal. I mean, you could take it and you probably do okay, but this would be my ideal setup right here. All right. So this, you know, the second green candle, I wouldn't be taking it. That's pretty good size, and you could easily get into it and get in on that. But it depends on where you are on support and resistance. You see, if this line right here, this blue line, for example, is, let's say that's the VWAP on a 5-minute chart, you don't want to get into the trade until it gets through the VWAP. So that's another consideration here, is where you're getting into the trade. You want to get through, you want to get on as it breaks through the resistance level, which would be the VWAP. And this is where it's actually confirmed that it got through there, right there. If that was the VWAP, this looks like a Bollinger Band. But whatever you're using for support and resistance, you want to see it get above it for a long and below it for a short. Okay. All right. So again, tips for using Heiken Ashi candles: examine nearby support or resistance levels impacting potential gains. This is not just Heiken Ashi candles. This is for anything. I mean, if you get into a trade long and you're looking at your daily chart and the stock is 10 cents away from the 200-day moving average, moving up, you don't want to take the trade. It's too close to resistance. So make sure you examine support and resistance levels impacting potential gains. You need a risk reward that's going to work for you, right? So you need a decent amount of room to your next resistance level. Try to align the trade with the current market trend for increased success. Obviously, if you're trading with the trend, your probability of success and your probability of profit go up. And again, choose a stock with relative strength or relative weakness. So when you've got multiple stocks that are starting to reverse, going back up into the original trend, if you've got one that's got relative strength, take that one. It's going to be high. It's going to have a better chance of moving. And again, you may or may not do this. I do this, but looking at the Bollinger Bands, looking for expansion, all that is a breakout of compression. When Bollinger Bands expand, the compression is breaking. That's what they show. Okay, so this is a recap of Heiken Ashi candles. Then we're going to look at some real charts with Heiken Ashi candles. It smooths out price action, reducing noise. It makes identifying trends easier. This helps you stay in trends. It improves identifying confirmation of trends or trend reversals. This is really important because most traders, most retail traders, what you're looking for is a breakout through it into a new trend. You're looking to get in on a trend early. And you can get confirmation with the Heiken Ashi candles because the Heiken Ashi candle itself is a confirmation of a reversal. When you get a bullish to a bearish, for example, you have a Heiken Ashi candle that tells you it's reversed. Now you obviously have to take into consideration where is it on the chart. Is it above the resistance levels? What's the market doing? All those kind of things. But that does give you a confirmation. Okay, and it does help identify exits when the candle bodies shrink or the reversal occurs. All right, so those are Heiken Ashi candles. I'm going to show a couple here. These are just graphics to show you how they work. And then I'm going to look at some live charts from Friday where we can identify some Heiken Ashi candles, reversals on some stocks. Right, so this was Uber. This was way back, old chart here. But notice these are normal candles. And this is my TC2000. This is a charting program I use, but easy to see on here. And you can see the gap here, and then the move up. All right, that's the regular candlesticks. This is a Heiken Ashi candlesticks formations on Uber. You can see the big move up here, bam, boom. But you see, if you were looking at it, you would have caught it right here on this Heiken Ashi reversal. See the size of the candles? See the big candle? That's a Heiken Ashi reversal on the first. And you see how it marched up nicely? And I have these colored blue, by the way, on my TC2000. These tells me that I have a compression break or Bollinger Band is expanding. But in any case, they normally would be green. But here's the move up, and you can see the candles, they're getting a little bit smaller. They're getting a little bit smaller. So you'd be fairly cautious as you got up here, and you would obviously get out of the trade here as you get the reversal occurred. But that's what Uber looked like. All right, so that's what the Heiken actually look like. Now I'm gonna bring over my TC2000 chart here, so I can show you some trades, or not trades, but some setups. And I've got a scan running on the other screen here that tells me everything that had Heiken Ashi reversal setups for Friday. Right. So this is CRBP. This is Corvus Pharmaceutical. What the stock is doesn't matter. But we're looking for the structure. Now see the structure. Now these are regular candles here. All right. So that looks pretty good. Let's switch over to Heiken Ashi candles. All right. So here's your Heiken Ashi setup here on this one. You can see if you were watching this stock, you see this reversal right here. Heiken Ashi reversal breaking below the 8 exponential moving average. That's what I have on here. It's just one of the ones I use in my charting program. Okay, so this is, see how we get flat top, doji, flat top continues. You want to get out of the trade right here. And then it continues on down. Continues down. Now this time we've just had a reversal here. You see this reversal? Moving up, this 8 exponential moving up through it, flat bottom, a little wick in the tail, and a flat bottom right here. This is another Heiken Ashi reversal on the daily chart. So this is one that if I was looking at it, I would look at it for a potential entry if the market was giving me the reason to do that right there. And here's my resistance level at the 50-day moving average. All right, so that's on CCEP. Switch to Heiken Ashi, so we'll show there. There's your Heiken Ashi. Very choppy stock, but you can see how nicely this worked here and how nicely this worked here. I'm just going through these random. I haven't looked at these before. So it is VeriSign, massively bullish here. Back here, you see this reversal right here. Basically, this was when you stay in. That was a beautiful long, and it switched back again to a long on Friday, but it's had a pretty tough week, of course, as we've come down pretty hard. All right, and I'm just going through and looking at bullish Heiken Ashi reversal candles right here. And some of them will look good, some of them won't. But that's how I have a scan that looks for these. Okay, so that's what they look like, and I don't see anything here that jumps out at me. Usually I go through these first and look, but there's quite a few of them here. That's a decent one. That's another biotech. Biotechs are a little different than most stocks. They don't really follow the market. They follow their own drummer here. H&R Block right there with a nice Heiken Ashi reversal. Nice move up. Pretty nice. And we look at the regular chart to see what it looks like. Here's the regular chart. It's breaking above the 200-day moving average. Pretty bullish right here on HRB. Pretty bullish. It's a very choppy stock, but that's a pretty bullish move right there. All right, so that's. Let me go ahead and look at bearish ones. We can just look at a few of those. All right. There's FDMT, very small, bearish one. Like Wonder, very small. Let me switch over to the Heiken Ashi. I'm looking right, this Heiken Ashi on it. This is a firm. You may have traded this one before. This is showing up as bearish. Oops, wrong one. Nope. There it is. BC, lit, Under Armour, kind of a messy chart. Kind of a messy chart. That's a reversal, but this was a big reversal here. I wouldn't touch it. GRRR. So this is what Heiken actually look like on real charts. This is RGS. This was showing me a reversal. It's actually a continuation. You see how it's bearish, and then you get a wick and a tail, and then at the flat top. That's a continuation of the downtrend here. Tony, can I use Heiken candles on weekly or monthly charts to identify long-term? Absolutely. I use them on daily charts for swing trades all the time. But yeah, if you're looking for really long-term trades, yeah, Heiken for weekly and monthly will do the same thing. If you're looking for a long-term, like where's a good place to get into a stock for investment, look at it on a weekly chart, look at it on a monthly chart, then you can use Heiken reversals for sure. Right, so that's what Heiken looks like. Let me just put a couple of trades, or I think a couple of stocks on here that everybody knows. There's Apple, doesn't really have one right here. NVIDIA, that's a Heiken reversal on NVIDIA. It's not really a reversal, it's a continuation. So NVIDIA is bullish off of this chart right here. Tesla, if you look at Tesla, I actually shorted Tesla back off of these Heiken candles. I didn't stay in very long, but this was a very nice bearish run. See, it flattens, and here's some more Heiken reversal candles to the downside. This is where you get out, and I wouldn't be taking this thing long right now. It doesn't have any Heiken candles at all right now. It's just got wicks and tails, so it hasn't really set up. Right? And some of those stocks. Anybody have a stock they want me to look at? I'd be happy to throw it up here. Meta, doing nothing. Amazon, doing nothing. Now, GDX, Tony? Yeah, okay. Right, there's GDX, big run up. Again, gold is very strong this week. Gold reached an all-time high. Here's GDX that Tony just mentioned. You can see the reversal here and a big reversal here in GDX. And if I look at the regular chart, there it is here, gap up. You see, this doesn't show the gap up, but here's where your reversal took place, right there. Right there on the 9th is where reversal took place. So if you go back to the 9th, this is where you would be looking to get into the trade, right there on the 9th. Right, so that's again, the Heiken candles does make it very clear. Again, it doesn't show gaps, but it's very, very important. All right, so those are Heiken candles. That's how you can use them, and they should help you trading. I use a lot of them. All right. Huge move, yeah. Gold was a huge move, Tony, and anything that related to gold, whether it's the miners, whether it's GDX that you just gave me is a gold miners ETF. It takes the gold miners, and all the gold miners are in that ETF. But GLD went up nicely, and Nugget went up nicely. All of them did. Now, I kind of want to mention some news that came out today, in case you hadn't heard it. The administration is now, as far as the tariffs on China are concerned, they have now lifted those tariffs temporarily, at least, on, let's see. They removed the tariffs on smartphones, laptops, computer chips, and related electronics from the high tariffs. All right, so what you're going to see tomorrow night when the market opens and Monday morning is the tech stocks are going to take a big, huge jump up. It's likely to be a big move. One of the ones that was beaten up so badly on this is Apple, because most of the phones come from China. 145% tariff on their phones is going to basically price them out of the market. So now they've decided to take those things off, and there's going to be more adjustments. And one of the reasons the market is so volatile right now is they don't know. Market does not like indecision. They hate indecision. They want to know what's going to happen, good, bad, or otherwise. They want to know, and they have no idea right now what's going to happen with tariffs. So anyway, Sunday night markets, the futures are going to jump. The Q futures will jump. Most likely, the tech stocks will all jump up on Monday, including NVIDIA, AMD. Anybody involved in that particular sector. All right. So let's take a look at some Heiken candles. We just looked at those. All right, now we're going to talk about the SPY super system. These are the trade results I've had over the last couple of years in the room. And I just remember that. What we're looking at now, we're going to look at right now is the results, okay? What we looked at before is the process. You must be able to internalize and learn the process before your results are going to follow. If you're just trading, looking for results, you're looking at you've got this thing backwards, all right? You need to get the process down. The process is, once you get the process down and you're following the high probability criteria, the results will follow, but you've got to get that down. And if you want to journal your trades, if you can, you should journal your trades. And if you have a losing trade, identify whether the trade was a good trade that just didn't work, or whether you made a mistake on taking that trade. That's what you're doing, is you're developing an understanding of the process. I mean, it's really important to understand the process. Once you've got the process down, the results will follow. But if you're looking for great results first without actually getting the process down, you're doing it backwards, and it's not going to work for you. All right, so these are the profits that we've taken, of the results we've had in the room. I've been doing this since 2022. This was 2023. I just did the last couple of years. We in the room, if you put $2,000 in each trade that we took, you made $60,000, a little over $60,000. In 2024, 2,000 each trade produced about 55,000. Again, the results we get is a lot of it's dependent on market conditions. Choppy markets don't produce as good results as trending markets. Of course, you can't stay in the trades as long. But that was 2024. And I did want to point out this thing. This is important for the room and for the alert service. This is really critical. With the volatility that we've had off of this tariff information, I had to cut way back in the number of trades I was doing. So when the market SPY was down, it was down over 10% in 2 days. That's massive. 10% drop in 2 days is massive. And then it recovered when they took the tariffs off. And that was again, the biggest recovery I've ever seen in 1 day off of a low. So that's huge volatility, which means it's almost impossible to trade. But these are the 4 trades that we closed out during that chaos. We had an AVGO, we were short. We had a debit spread on this thing. We took 39% profit. We had Nike, and you probably know what happened to Nike when the tariffs were announced for Vietnam. We had entered at $285 a contract. We took some off earlier, but we closed the entire trade down for $9. We get in on the 28th. I think we get out on the 1st or something, on the 30th. But we were in it for a few days, and it plummeted. So we get in for $285, out for $9. This is the biggest trade that I've had in the room in the last couple of years. This was a huge percentage. We typically don't get 200% gains, but we took 216%. We were short Sarepta right here. In at 450, out for $8, 78% profit, made $1,400. These are the profits on $200 invested in each one of these trades. Those are the only trades we had and the only trades we closed for that period of time. All right, and this is why it's important to structure your trades and take your trades based on what the market's doing or not doing. So we had very few trades on, but we had some good ones. All right, so this goes back to January 2024. Now, I'm just going to run through these fairly quickly. I'm not going to spend a lot of time on them. The whole point is to show, yes, we're profitable. Yes, we take some nice trades. Some months we take a lot, sometimes we take a few. But I want you to see the percentage gains that you're typically going to see on the trades that we take. You know, 10%, 43, 37, 32. This is the range you're going to be in the trades, because we're not going for home runs here. We're going for singles and doubles and triples. You know, we had a good 98% in Boeing here. We had 65% in Mara. That's a crypto stock. But these are the trades we took in January of 2024. All right, this is 2024, not 2025. 20 wins, 2 losses, 90% win rate, 75.05 was the profits. February of 2024, and again, I want you to see what to expect. Please don't expect 200, 300, 400% gains on trades. It's not going to happen. Okay, and you can see we also take losses. It's important to understand we take losses. Everybody takes losses, and this was February. This was, I think, our best month last year. 11,745 profit on 2,000 invested, 24 and 2, 92% win rate. This was the alerts. We don't take every trade on the alert because some of the trades are too quick. They come too late in the day. I can't put an alert out when I take a trade at 10 minutes of 4. And some of them are going to be very quick. So I don't alert on the SPY Super System trades or on the trades we take late in the day. If I think it's going to be too quick, I won't alert on it. It's not fair to the alert service. This is May. I'm just going to kind of jump around here, but this was May, 15 and 2. See, we only had 17 trades, 88% win rate, but nice profits. June, decent profits again. The room actually made more money than the alerts. I mean, made more money than the room in June. But nice results. Very nice results with losses. July, same thing. 75% win rate. This was about the lowest win rate I've ever had since I've had the service. I was on the alerts. Still made $3,300. All right. So, and this is August. This was September. This was our only losing month last year. I do want to show this. I try to be transparent about the trades that I'm taking. I want everybody to see what the results really are. And this was September. We had only 8 wins and 5 losses. That's pretty horrible. 62% win rate, lost $1,786. The alerts lost $295. All right, and this happens. I mean, it was a tough month for trading, and sometimes you're going to lose. That's just the way it is. This was October, bounced right back again. November, bounced right back again. This is just a recent January, February, March. This is the current year, 2025. This was in January, 15 and 3, 31.35. February, 16 and 2, 3,800. Nothing huge here, but it's still pretty nice wins. March was good. 20 wins and 4 losses. We had a couple of big ones in there. $7,800, 83% lower win rate, but more money. Okay, so those are the trades that we take. That's the kind of percentage to expect. Here is what the alert looks like when it comes out. Again, you're going to get an alert that's going to have the stock symbol on it. It's going to have the option strike price on it, the expiration date, and the price to pay for the option. Here's an example. On 3/28, we sent out Nike NKE. Buy the April 11th 67 puts for $285. That was the Nike I showed you. Then that would have gone out with just like that. Then later on, when we decided to sell it, I put an alert for the sell order for $9. They were sold for $9 on April 3rd. And that was a beautiful profit. That was the big one. But that's what the alert, that's just the structure of what the alert looks like when you get it on your phone. Now, just to kind of quickly, we've covered this a little bit. How do we achieve these stunning results? And I'm going to show you the SPY Super System here and how it does what it does. But we're able to identify when institutions are driving a trade and when the market internals are heavily bearish or bullish. So we only take trades when both of those are in our favor. Not 100% true. I'll take a trade if the institutions are in the trade as long as the market internals are in my favor. In other words, neutral to in my favor. I'm not going to go against the market internals. All right, and then again, we're just aligning our trades with the institutions. How does the SPY Super System do this? We triple screen assessment. We do multiple time frames that I mentioned before. On momentum, this is the key thing that I use for momentum. This tells me with the divergence stripped out whether the institutions are in the trade or not. And then we look at the trend. And those things need to match up over multiple time frames. And again, this I showed you before. This is the SPY Super System on thinkorswim. This is what the software looks like. Right? When you get it, if you buy the software, this is what you're going to see. Now in the room, if you're in the room, you don't have the software, this is what I'll be displaying every day. Every day I keep the SPY, the Q, the IWM up on there. I put charts up there for any stock that any traders want to ask about. Again, I'm in there all day long, so I'm answering questions and showing stocks and telling you stocks that I think look good or don't look good. But again, here's the long-term trend: red and yellow bullish, blue and green bearish. Sorry, red and yellow bearish, blue and green bullish. Multi-time frame momentum, very key. Current time frame momentum, also very key. This is the current time frame, and this is the actual oscillator. Now, when you're looking at a swing trade, you want both the current time frame and the multi-time frame momentum to be lined up. When you're just trading a 5-minute trade, very quick trade, like a scalp trade, this is what you use, the current time frame momentum. All right? And again, this is VWAP. support resistance, 15 support resistance. Those are your levels. All right, and we have a new template as well. If you're a trader that just wants to trade the SPY super system on the SPYs, Q, the IWM, or the futures off a 5-minute chart, this is what we give you as a template. You have two templates. You have this template, and then you get this template. You can switch them back and forth. All this shows is the current time frame momentum, which is what we use for SPY super system trades, the VWAP, the 15 EMA, and we do have these pink and blue arrows. This shows you compression breaks that the SPY super system puts on the candlestick. All right. The question here, even mean to ask something. I see a vertical bar show up at the bottom. What does that mean? Let me see if I can find a vertical bar in the bottom. Do you see it on any of these? Because there used to be one which, when it showed the trend dots crossing the 15, and if you see anything like that, that's what it is. And it was an indicator that get put on there when the trend dots cross the 15. I don't use it. It doesn't show up often yet, and I don't use it, TD. I don't use it. I'm much more interested. I think that if you're using the trend dots when they cross the 15 as an entrance, I think you're too late on the trade. If I took this trade, for example, what I'd do is as the current time frame momentum went to green here, I would take it right here, and then I would get out right here. I'm not worried about these trend dots. I'm worried about where is the stock in relationship to the VWAP and the 15 EMA. Yeah, it's not on the candles. It's down here, right? Down at the bottom of the chart. That's an old indicator. All right, so these are some Heiken Ashi candlesticks here. This is a SPY super system trade. Now this is a trade that, as I mentioned, we take these in the room. They're based on the 5-minute chart, and we have great results with these. But these are quick trades, and you have to manage them yourselves. But these are some of the ones that I took. This is where we get in right here. You notice the current time frame momentum, bullish, bearish. Went from bullish to bearish right there. I take the trade right there as the stock breaks below the 15 EMA. You see the 15 EMA. Take it right here and write this thing down. As long as it stays below the 15 EMA, you can stay in the trade. And these Heiken Ashi candles give you a beautiful trend for this. That's a nice long trade. We haven't had a lot of trades like this lately because it's been so choppy. But that's the SPY super system trade right there. And these are the results we've had on the SPY super system. This is just for inside the room. These are trades that I've taken, but I got a lot of traders using this because they bought the SPY super system and they make these trades. But these are the results we've had with the SPY super system. Started in July, 16-0, 25.96, and you can see the win rates, the wins and the profits here. A lot of trades. You can take a lot of trades with this because a lot of them only last 10 minutes. Some days there'll be 4, 5, 6 setups. Some days only one, but there can be a lot of setups, and if you take them, if you're following these. But these are results we've had, and you can see they've been extremely good. And again, with the SPY super system, you're only going to have one trade on at a time, and it's going to be very short duration. You've got to watch it. You have to manage it yourself because these things can really move quickly. All right, and this was November, 54 and 5, December 69 and 15. We haven't had this many. We did have 10,000 profits. I did have 10,000 profits in January, but February and March have been weaker. In the 3,000 or 4,000 range, which is small for the number of trades that we take. But this is what this has resulted in. Now it's important to understand that the results from the SPY super system that I just showed you are not reflected in the room trades or the alert trades. These are separate. These are separate trades. This total is not included in this. This is a separate total for the SPY super system trades. But I had a lot of people who wanted to know about this and trade this, so I broke it out so you can see how I've done. These are my results. Right? These are my results because I can't post these because they're too quick. I just mentioned when the setup's taking place in the room, and the members can jump on it if they want to, and then they have to manage it themselves. All right, so this was October, November, beautiful month of November, December, pretty good month in December as well. Okay, we only had 17 trades in the room, and we had 84 here, so a lot of trades here. And this was a quarter based on the SPY super system and the options in the trading room. These are completely separate from each other. And again, that's why that cumulative graph I showed you about the equity curve, why that was so strong, because we had a big quarter on the last quarter of the year. All right, so here's some SPY super system trades that I actually took. These exactly setups. I just want you to be able to see the setups. We use them for on the SPY super system. We're only using this, right? Current time frame momentum, VWAP, 15 EMA. That's it. Here's where we do the entry. See red, blue, breaks above the VWAP, breaks above the 15. You take it long, you ride it up, it starts to lose momentum, you get out here. So that was good for 220. 220 a profit per contract. That's pretty high. Most of the trades are going to run more between about 70 and 120, $130 per contract because they don't last that long. It's been very choppy, right? So there's one. This was a trade here. This was a very quick trade, $90 profit. We did this on 225, just took it here, get out here. These are Heiken Ashi candles. Get in here, get out here. Notice it's right here, it's red. Down here on the current time frame momentum, and it's breaking below the 15 right there. Take it right there, and it breaks down. And I get out the next candlestick. This was a really volatile time, and this is the same thing on the new template, which just shows the current time frame momentum. But this is where we get into the trade right here, as it went off the 15, jumped in, as it went yellow, get out right here as it bounced back up again off of this tail right here. It took profits in that. So this is the modified layout. Okay. Let's see. All right. So this was a new template for SPY super system. As I just told you, I just wanted you to be able to see that one. You get both templates if you buy the spot software, but this was the entry right here, and we've seen this one before. But that just shows you what the key criteria is for trading the SPY super system. It's the current time frame momentum, right? And this was another SPY super system trade. So you can see this was back before we had put in the oscillator down on the bottom, but you can see the green. We can see everything's buying here. Anybody can see that the institutions are buying the SPY right here. It's just a matter of finding your entry and taking advantage of it, right? Same thing here on the IWM. You take it here as it goes to blue, selling, yellow, buying blue. You take it here, and then you don't make any profits here for a while. It just kind of sits and moves sideways. But as long as it stays above the 15, you stay in the trade. And then finally, you get a little bit of move up here, $90 per profit. That's a fairly long trade. Normally, they don't last that long. That's probably what you're talking about right there, TD, on the very bottom of the rows. And if you look at that, you can see it's when the trend dots cross the 15 EMA. I don't use it. Another nice one here. This was a short on the SPY. This was on the IWM. See the compression? See it break below the 15 in the VWAP right here? Breaks down. So we took the trade. Everything's red. We can see that the institutions are selling. We just want to find a good entry, which we do right there. And then we write it down, and then we get out right here as it goes from red to blue, and it breaks. Basically, just loses momentum. Right, $120 a contract. This was another big trade, 280. This is a very unusual to get this big a move, but we did get in here. We get in as it broke below the 15. We ride it. It stays below the 15, closes below the 15 in every candle. We stay in it. This pivot point becomes an area where you got to be very cautious. So it was very cautious here, but it broke down, and then we get over here. Big trade, probably one of the biggest trades of the SPY super system. All right, so this is what they look like, just so you know. I don't want to go on too long with all these, but this is what SPY super system trades look like for anybody who wants to trade quick trades off a 5-minute chart. These are not swing trades. These are quick momentum trades taken during the day by people who want to trade this kind of methodology. And I have a video on all of these things. I have a video on the SPY super system setups and how to use it. But again, process before results, right? Learn the process. The results will follow. Another one here, and I didn't show you where I get in, but I wanted to just put it up here so you can identify current time frame momentum, bearish, right? Blue, it goes bullish right here to blue. But notice where it is, right at the VWAP. You don't take it here. It's right on the VWAP. You don't take it here. Here's the break of the VWAP right there. That's where you get in. It's gone bullish. You get in right here. You ride it up. You get out right there. Fairly quick trade. Okay, so that's what they look like. And I just kind of throw these up there so you can see them. And you can see the current time frame momentum and the multi-time frame momentum. This is what we'll be using for day trades, swing trades, as we move to those. All right, so again, notice breakdown right there, all red, take it to the downside, and get out right there as it starts to bounce back up again. Same thing here in the SPY. All right. So now I want to look at some charts of the swing type trades that we took and how we use the SPY super system for that. And this is Nike. This was the big one that we took. All right. Now you notice that it was bearish across the board. This is the daily chart. Current time frame momentum is here. Multi-time frame momentum is here. Long-term trend is here. They're selling the heck out of Nike, right? But we took it right here. I think 28th right here. This is where we took it on this breakdown. See this, the 28th, as it broke this compression, this is where we took it, and we took it as a swing trade. We went out in 2 or 3 weeks in time on it, and we held it, and we held it, and we held it, and we held it, and then pop. This is what happened on the tariffs. So while we were in it from here, we had a little bit of profit. We were actually up a little bit on this day. You could actually take in some profits that day. Went from about 285 to 385. And then it popped back up again, and then we were in it, and then this come down, and we were out on that morning. We got out of that thing as soon as that stock gapped down. One of the criteria that I use when I'm trading is gaps are gifts. When you get a stock that gaps in your favor, take the money. Don't try to stay in it and hope that it's going to keep going in that direction. Most of the time they don't. Sometimes they do when you miss some extra profits, but you've locked in the money. Gaps are gifts. Take the money. Sarepta, this was the other one we had here. Again, we get in on 4-1 right here as it broke down from compression. Institutions selling the heck out of this thing. You can see that. We took it here, get into it here, and we get out immediately on this big drop down. And that was another beautiful trade that we took on Sarepta. I think I showed you that one. This was HIMS. We had a nice win in HIMS. This was a long, again, here they're buying here. This was in February, buying hard. The stock is moving sideways. I didn't get into it till here. Probably should have taken it back over in here. Notice that the current time frame momentum and the multi-time frame momentum was still yellow. So I couldn't take it till at least here, where I had green and green. But I didn't take it till here. I don't know if I just missed it, but I took it here and get out for 25% profit, left the runner on, and that runner produced 269% profit. It's crazy on this big move on HIMS. But because you can see that these prices here, it's $42, that's $63 up there. All right, so that was a good one. Palantir, we had a nice win in Palantir of about 31%. Again, you can see looking at the indicators, current time frame momentum, multi-time frame momentum, both green, institutions buying, trend green, institutions buying, we buy it ourselves as it comes out of compression, and we just take a nice profit in 2 days. Again, it isn't necessarily the profit here, it's impressive. It's the criteria that we're using and following the process. Following the process is critical. Twilio, just 58% profit in 2 days. We actually did a debit spread on this one. As it popped up again, we got green here. We actually took this candle right here. This should be moved over a little bit, and just took a quick profit in 2 days on that one. Lulu, this was the one we took short. Gap down on earnings, didn't take it here. Followed it. You see how it's green here and then went yellow. Waiting for compression. We get a compression break right here. We take it overnight and we get in here and we get out here. And that was in for 192 a contract, out for 56% profit in 1 day. But you see what we see how we got it here as it went blue, long-term trend to yellow. Institutions go from a little bit of buying to selling. We're in it. We're out. And of course, the multi-time frame current time frame was already red. This was red all the way across. That was our entry right there as it went blue to yellow. Okay. All right. So this was a day trade. This was a 5-minute day. This was off the 5-minute chart. This is Amazon. You can look at the indicators here. We're looking at 5-minute charts, so we're more interested in this. Yellow, green, yellow, green. Here it went green. It's coming across the 15. This is where we take the trade on this pop out of the box symbol. We take it here. We get 32% profit in 45 minutes as it stays above the 15 the whole way, and everything stayed green. ENPH, another nice short, 20% an hour. As it broke down here, see compression, all red. We knew the institutions are selling the heck out of this thing. So we know we're going to short this. Just a matter of where do we get our entry. We get our entry right here as it breaks down below the 15. We take it and we're in an hour and we're up 20%. Selling continues across the whole time we're in that trade. right? And Verizon, another big winner here, 50% an hour. The institutions selling and buying, I think we can see this selling here. So we stayed in that trade for an hour, took 50%. I remember that trade. I paid $45 a contract for the options because they're not very expensive for Verizon because it's very tight spread and it doesn't move much. And we get out for $67 a contract an hour later. That's a little over 50%. And Tesla, we took an overnight trade. We do use it for overnight sometimes. Again, we had a pop out of the box symbol here. Everything's red. Right here, everything's red and yellow and all the way here. So we take it short overnight, and we get a break. We get a big gap down from 120 to 112. Took a huge profit in Tesla. And again, we have losing trades. Remember that. All right. So here's that's the SPY super system. That's the software. This is the strategies you use in the trading room and on our alert service. We covered these. We use all of these. This is the only we use on 5-minute charts. This is for folks who want to do quick intraday trading, and so this is what the service provides in the room and on the alert service. And remember, I'm in the room all day. I do analysis of stocks for everybody all day long. We talk about strategies. We talk about process versus results. How important is to focus on that? Okay, so these are what we offer for specials this weekend. You can get a 2-week trial, which would be for the alert service and the trading room, not the software, but the trading room and the alert service. You have access to the alerts, to the room, to the alerts. You get to look at you get to read or listen to all the modules I've done, the videos I've done, and all the strategy we use. There's about 30 of them. So you get 2 weeks free, and then it rolls over to a quarterly subscription. Obviously, you can cancel anytime if you want to look at it. I don't personally, especially in this market, I don't think 2 weeks is enough time to make a decision on anything because the volatility is so high, and we haven't been taking a lot of trades, so it's very difficult. The SPY super system will work well, but some of the longer term swing trades you can't do right now. There's just no direction to the market. The other thing is, if you want to sign up and get a better price, the annual access is going to be $11.96, and that is for the alert service and the room. Those are together now. You're getting both of those in the same price, which they did. This is fairly new. They used to be separated. For this weekend, they're putting these together. So you get the room and the alert service. You get it. We have a private Discord chat community that you can get on. You get the Wise Way to Trade Options Masterclass. So this would be a year. It's much cheaper, obviously, than using the quarterly. Or you can take a one-time payment. You can get the room and the service forever, one time. Don't have to renew it all. $24.96 one-time payment. Same thing. Alert service, trading room, Discord, and the video library that I've got. Okay, and this is the SPY super system. This is a software that goes on Thinkorswim, and Rightline technicians at Rightline will put it on the Thinkorswim platform. If you don't have the Thinkorswim platform, you can download it for free. They'll put it on there. That's where you're going to get your indicators from. You don't have to trade on Thinkorswim. I don't trade on Thinkorswim, but this is where you're going to get your indicators to take these trades. And again, you're going to get the Compass trading system, but it's now called the SPY super system because there's a bunch of scanners and things that have been added to it. You'll get the master classes or the videos that I've done for talking about strategies, talking about indicators, how to use them. There's one on the SPY super system. There's one on straddles and strangles. There's one on the highest 11 biggest mistakes retail traders make to keep them being profitable. It'll be installed on your computer for free, and you get any kind of updates that come for free, any kind of problems you have with it, they'll take care of them for free by the tech team at Rightline. And you do also get a month in the trading room for free and a month of the options for free if you buy the SPY super system software. All right, that's $14.98 a year. If you take a one-time on it, you would get it so you can keep it forever. It's $19.98. Now, if you own the software, you can trade yourself. You don't need to be in the room, but you will get the room for a month. And if you buy one-time payment, if you buy it forever, you don't have to subscribe again. You get 3 months in the room and 3 months of the alert service to use as well. So that comes with the SPY super system. Okay, any questions on that? Took me a little longer to do this than I thought, but I try to be very inclusive in these things and try to be clear about what we're doing. This is a methodology that you can learn, that we teach to become consistently profitable trader. You know, the biggest problem most traders have is overtrading and overcoming their emotions. It's the hardest thing to do. I can't change that, but I can give you the criteria to use to follow. And if you follow the criteria, over time, you'll be consistently profitable. But, you know, you can't guarantee anything like that because everybody's their own person. Everybody has their own emotions to deal with. Everybody looks at money differently than has somebody else. It's really important not to be trying to trade your P&L. We trade these trades. I don't even look at the P&L. It's all based on the technical setups. That's how I get in and out of trades. All right, let's see. And now in the chat box, by the way, there should be links. I'm sure there is. Yeah, there's links to the for both of the this right here and for the SPY Super System. You can click on those and get in there. If you have any questions, you can call Rory at 786-732-4656, or put your name and phone number in the question box, and he'll follow up with you. All right. So, any more questions on any of these things? Anybody wants to look at any other stocks? I'd be happy to do it. All right, in that case, I guess we will go ahead and wrap it up. Again, I appreciate very much everybody coming in on a Saturday. I hope this helped you a little bit. Oh, Palantir, Anthony, you want to look at Palantir? Okay, we'll look at Palantir. Let me bring over TC2000. I've got that up, and then we'll look at Palantir on, in fact, we'll look at Palantir on the Compass system first, the SPY Super System. All right. This is the live SPY Super System right here. This is a 5-minute chart, but let's look at Palantir on a daily chart because these are some of the scanners, by the way. It comes with the software. This is a cascading up. This is current. This is stocks with relative strength. This is stocks with relative weakness, new yearly highs. But let's look at the daily chart on Palantir. All right, so here's the daily chart on Palantir. You see, it's very choppy. The market's been very choppy. You see where it is right now. Right, so we're looking at this and we see there was some buying coming into Palantir on Friday. All right, it's bullish, but notice the choppiness in the multi-time frame momentum, and the trend is down. So right now, it's not something I'm going to take for a long. I wouldn't be taking anything for a long right now anyway in this market, but there it is right there. Now, if I look at it on TC2000, all right, so here's Palantir. That's Heiken Ashi. Notice we get a Heiken Ashi reversal right here on Palantir, telling us that it's turning bullish. But the SPY Super System telling us the institutions are not committed to this yet, right? And here it is right here. Now notice a couple of things about the SPY Super System on the TC2000. Here's the 100-day moving average, this blue line. This is the white line is the 8, and the 15 is the orange line. And this is right here is the 50-day moving average right up here. It's not good when you've got the 100-day below the 50-day because we've been in such a big downtrend in Palantir. But it's starting to set up as a bounce, but you've got quite a bit of resistance right there. And again, the SPY Super System is telling you right now that you don't have a consensus between the long-term multi-time frame trend and the current time frame trend. Okay, Anthony? Hope that helps a little bit. Again, there is your SPY Super System right there. That's a live look at what it looks like. If I go back and I look at futures, one thing I should show, I suppose, is what the TC2000. It's easy for me to look at TC2000 for longer term trends, but let me bring something up here. All right, let's go and look at the SPY on the daily chart. This is kind of important. All right, now you see the size of the candles you usually get with the SPY here, and this is we're talking about volatility. Now, this is when this correction came right here. Gap down, gap down, gap down. Looked like we were short. This is where everybody got short. This is where the hedge funds got short right here, right? And they decided to short the market. They figured that the tariffs were gonna push the market down, which they certainly were doing. But these are big candles, right? These are 5 and 10 and 5 and 7% drops per day in the SPY right here. Right here's where they right down here. This is where they announced that the tariffs were on hold. right? Now, for informational purposes, the reason that tariffs went on hold was the reason for it was because of the bond prices. I know you probably don't follow bond prices, but the bond prices started to skyrocket, and the 5 and 10-year bonds became a higher interest rate than the 30-year bonds. That's called an inversion in bond prices. And why that's important is they weren't able to sell near-term bonds to people to refinance the U.S. debt. So what would have happened is if the bond prices kept going up, any refinancing of the U.S. debt would have been done at a much higher level, which is very, very bad, because obviously paying the debt is one of the highest parts of the GDP of the budget. It goes to paying down debt. So that's what happened here. The thing spiked from 4% to 4.5%. Japan was selling bonds instead of buying bonds. The bond market was basically it was chaos, and that's what caused this tariffs to be paused, because there was likely to be a free fall. So that's what happened. And this candle right here, we're likely to trade inside of this candle, well, for the next month or so, except for the fact that they just took the tariffs off on a lot of tech stuff, which is probably going to cause a big pop on Monday morning. But this candle is enormous. This is the biggest candle percentage-wise or dollars-wise that I've ever seen in the 15 years I've been trading. This was when the hedge funds and people who were short got trapped in this. This is where they get killed. This is where they got wiped out. They got margin calls on them. And basically, this has ended the trading career of a lot of retail traders. That one candle right there. And then people who jumped in long on the top of this candle got hammered the next day as we gap right back down again. This is a brutal market to be trading. That's why we're trading so few stocks. Why we're sitting on our money right now, waiting for the trend to develop. All right. So I hope that gives you a little insight into what happened here today in the market. And again, important thing: get good at the process, the methodology, the strategies. Get good at the process. The profits will follow. Don't look for profits first. Look to learn the process first. Okay. All right. Thanks, everybody. Listen, have a great weekend. Thanks so much for being here. I very much appreciate everybody taking some time on a Saturday to listen to my webinar. Appreciate it. Have a great weekend. Look forward to seeing you in the room on Monday.